Hey guys, it's Jeff with Simply Derivative, and here's the daily recap. Today is Monday, May 7th, and we're taking a look here first at the E-mini S&P, or the ES. Equities continue to rally up from Thursday and Friday's move up until about midday, where we saw a nice reversal in the four major equity indice futures. The S&P had got up to about 2680 before it pulled back, and that happened to be on a daily chart pretty close to the 50-day moving average. And going back to Thursday and Friday, we had tested to the downside the 50-day, or the 200-day moving average, excuse me, multiple times, and then reversed and closed above it, and basically have shot back up to the 50-day that's been moving down and making lower highs and lower lows over the past several months, and getting closer and closer to this 200-day, which now sits at 2616, and the 50-day is at 2681. So something to pay attention to. We were able to get below the 200-day but not close above it. Had not been able to even get above the 50-day. So there is still some selling pressure, and looks like traders are cautious, even though we've had some nice days to the upside these past 2 trading days. So we will be paying attention to what's going on later this week based on where we're at. So today we had come up to previous areas of some selling pressure, and we saw some more today. So we'll kind of see if we can hold these areas above 2660 on the ES. If we can't, we may be heading back towards that 2640, 2630 area in the short term. So we are a bit overbought in the short term on this 240 chart, and we did hit that zone up above, and you saw that play out in a reversal midday. Same could be said for the NASDAQ, which has been the strongest market. Came up right into this area, this high, back on 418, 419. We like the level above it that it couldn't get up to before, which was about 6,900. So we'll see if we can hold these recent gains, but we are encountering some more selling pressure, so would not be surprised to see us pull back a little bit. The ETFs for these major products, again, bouncing up against some of the supply overhead, so we'll see if we can cut through it and move to the upside. Otherwise, we may be stuck in this range for a little bit longer, and may even head back towards the lows. But if we can break above this, 2700 is in jeopardy for the upside, so we may get above that and move higher. But we'll wait until later this week to probably be talking about that. Interest rates staying steady right around 2.95, so not much going on in the bond market. Other news was oil had put a high in above $70 and then reversed about midday. Same time equities kind of reversed, so the correlation between equities and crude is starting to come back maybe a little bit, and crude's bouncing at the moment, but on a bigger picture daily time frame, it's looking a little bearish right now, at least for the short term. We may see a little bit of a pullback, especially if this pattern holds, this candlestick holds. So we're going to look to maybe put on some positions in oil this week as well. And what else? Apple had popped up, gapped up again, made new highs, and now closed with a favorable type of close and end candle pattern for all the bears out there. So you combined this with the NASDAQ running into some supply or some selling pressure, and we have the potential for at least a pullback here in the next couple days. So those are the things we're looking out for. We'll give you updates later this week on how things are going. We have a few earnings left this week, so we'll keep you guys updated. Otherwise, check us out in our group coaching room, follow us on social media, and be sure to subscribe to our YouTube channel. All right, take care.